Good morning, everybody. Happy Wednesday. How are you guys doing today? Good to see everyone in here. We've had a great Monday. We've had a great Tuesday. So hopefully we can have a great Wednesday as well. But you guys have been doing amazing. So shout out to you guys on the trade setups. A lot of them did hit after our session yesterday as well. So maybe some of you guys saw that in the Discord group, but eventually got some of those breakout trades just a little bit later in the day. So I'm going to be showing you guys some of those as well. The grid has been updated. So buy zones, looking for them a little bit lower, and sell zones still target prices. When we take a step back and look at the daily charts, higher time frame trend is still to the upside. So even though we're seeing the markets pull back now, it seems like they're just going to keep going lower. Just remember to take a step back, look at the monthly, the weekly, the daily charts, still in an uptrend. So this could potentially just be a pullback into one of our buy territories. So keep that in mind, always looking for the 3 touches, not only on the bottom side, but the top side as well, getting in some of those breakout trades. So trading tip of the day, currently it is an outside day on many of the equity index features as price broke the prior session's lows. So while we may see some short-term bearishness, the higher time frame trend remains to the upside. As they manage risk closely today, we do have several reports and Fed chairman speaking today. So going to cause a lot of volatility as well, potentially to the upside and then to the downside. But again, just bigger picture, we're still in an uptrend. So keep that in mind with taking the short trades today. So what's in the news? Also more on the bearish side, US stock market futures slip from 3-month highs as traders await Fed minutes. So that's going to be a big one that we're keeping an eye on today. And then also retail sales miss estimates, futures lower. So we're seeing a lot of bearishness. But then again, I'm just taking a step back and looking at what the daily charts are showing, that this could just be a pullback into many of the buy territories that we have set up. Hey, Cindy, Almanac says it's going to be a bull day. Very interesting. I'm glad you looked at that. So let's see if price is going to be dropping into some of our buy territories. You know, what we were looking at yesterday too, as far as is it dropping in on the quarter hour, the 10 o'clock reversal? What are the stocks doing? And really trying to put all those pieces together. So it should be a good day. Good to see everyone in here. Scott, I'm keeping an eye on oil as well. So let's see. He's saying 3 touches upside and downside just beyond the opening candle range. Yeah, I've got that marked. So we'll take a look at oil. One of the first ones we'll look at today. Yeah, big opening candle in oil. So we'll see, looking at that support level that's been tested a few times, trend still remains more to the downside. So we'll see if we can splice into oil as well. As I mentioned, a lot of economic reports today, so keep that in mind, as well as Fed chairman speaking at 9:30 a.m. Eastern, as well as 2:20. Business inventories at 10 a.m. Eastern time, that 10 o'clock reversal time, and then oil report at 10:30. So we'll keep an eye on oil as well. Breakout trade opportunities, looking at the Dow for a short trade. I'm not sure where we're at right now on the Dow, but that's where we had the 3 touches on the bottom side, I believe, marked yesterday. So price coming down through this area, we may see a breakout trade opportunity. Also did just want to go over our breakout trades from yesterday's session. So all of these were on our prep screen for you guys. I think all of these did hit after the session, except for Dow, which we were in. We saw a little bit of that volatility once we got into that. But did anyone in the room take either the S&P long when we got that move up, or oil to the short side? And then Dow we got during the session. But anyone take advantage of some of those trade setups? So S&P, if you were in yesterday's session, this was pretty much all of the session was just chopping sideways within this range. We broke out to the downside and then it whipped right up through that resistance. So really nice picture. Again, trading with the trend may, is a good way to, get in long some of these trade setups without getting overly bearish, when sometimes we can break down and then ultimately continue back with the trend. I just want to show you that's on the S&P. This one was the Dow, so eventually we got that breakout to the upside. A nice move higher on that one once we took out that resistance area here. And then oil as well, again, happened later that day, so not in our session, but we started to break lower And then that's where we had that nice move to the downside. So remember all these areas on our prep screen, as well as the recap screen, just make sure you're marking these and keeping an eye on them, as well as the breakout trade opportunities. Just make sure that if you're taking them, managing risk closely and looking for that leg base group of candles, so you know where to place your stop at. And then we will recap at the end, go over our open buy and sell territories, and then you guys can keep an eye on those after the sessions as well. So jumping out again, back to the news. Oh, did just want to mention, so for anyone who's new in the room, just did want to point out that Jeff and I have been posting a lot of our setups on Twitter. So if you aren't following us on Twitter, please do so, just so you can see, you know, what trade setups are happening. We had a couple from Monday, some from yesterday. So if you want to stay in touch, my Twitter handle is @KateTrades. And then Jeff's is going to be @jmans1111. So just for anyone who doesn't, again, we're posting a lot of the trade setups that are working and then your results as well. So you may see a shout out in some of our posts. Back over to the news, so a little bit more on the bear side. No surprise there as we're seeing this pullback in the markets. Recession isn't priced into stocks. US stock market futures slipped from 3-month highs. Going over to Yahoo Finance, again, retail sales miss estimates, futures lower. So a lot of bearishness coming into play. But overall, again, I'm just keeping in mind the bigger picture of the higher time frame trend being to the upside, and wanting to take that into consideration with finding if potentially we could see some breakouts to the upside. Then Econo Day. So as we saw in the news, FOMC minutes is going to be at 2 p.m. Eastern time. That's going to be a big one. We already had retail sales at 8:30, but then we have Michelle Bowman speaking, Fed Chairman, 9:30 a.m., 2:20 Eastern time as well. We have business inventories at 10 a.m. Eastern time, 10 o'clock reversal time, and oil report at 10:30. So a lot of these reports, again, coming out, going to cause that volatility in the market. So just be cautious today, manage risk as we are seeing this drop in the markets. Okay, now let's jump right into the chart. So taking a look at oil, getting ready for a similar setup. So we saw how yesterday panned out where we had that support area tested several times. I believe towards the end of our session, we were getting back down on oil, but ultimately got that breakout trade. Similar setup that we're seeing now today. So we're seeing price hitting support once, twice, 3 times. Now, if we can get that leg base group of candles to form right at that breakout point, we'll look for the trend to continue to the downside. We can see stepping back, oil has been in more of a downtrend. We'll know where to place our stop and take that breakout to the downside. So again, looks pretty similar to this picture over here, but we'll see what happens if we do start to push lower on oil. Going over to the S&P now. So currently, as I mentioned, we are an outside day. We broke that prior session's low, but then just remember to take a step back and see that we have had this big move to the upside. So during this whole move up, we've been forming new buy territories as prices continue to move higher. So price may drop into some of our buy territories, continuing the trend higher, which is why I'm not going to be necessarily overly bearish until the trend is potentially terminated and we start making lower highs and lower lows. Just being a little bit cautious today because it is an outside day. However, we do have some lower buy territories in the context of this uptrend. So 15-minute time frame, very much a light volume drop that we've seen from the overnight sessions. We see price just rallied up and then we've just dropped down looking for where those buy orders are at. So even this 2-minute sell territory, leg base, it's at the origin of this move to the downside. I would be very cautious with this one though, because of the volume. So you can see that created on very low volume overnight session. So I'm going to be more hesitant about this one. I may use this as more of a target price, but not the best spot to go short because of the lack of volume there. Looking for buy territory, so price continuing to go lower. We step out a little bit on the 15-minute time frame, we have this area of resistance right in here. We have 1 test, 2 tests, 3 tests. This 4-minute leg base was formed on higher volume during the regular trading hours. It's below that resistance. You can see, for those of you who were in mastering the charts, it's within our buy territory. So a couple things I'm liking with this one, if we do continue to move lower, keeping an eye on this 4-minute leg base. That's going to be at 42.35 with our stop at 42.27.5. So this leg base, buy territory, better location, higher volume. This sell territory up here, a little bit lower volume as we've seen in the overnight session. So just being more cautious with this one, I would say. Looks like Russell barely missed the zone. Okay, so yeah, we'll take a look at NASDAQ and then jump over to Russell. I'm not going to be jumping in, quite yet to any trades, even long trades, just because, we're still about 20 minutes away from the market open. We often see some of that volatility. So it's good to see what happens when the market opens, and then start to kind of pan out the day from there. So NASDAQ daily chart, again, we are an outside day. We broke that prior session's low. Price may drop into some of our buy territories in the context of an overall uptrend. But just keep in mind a lot of reports coming out today, and we may see some additional volatility. But it is an outside day to the downside in the context of a overall higher time frame uptrend. Going down to the 15-minute time frame, dropped into our 3-minute leg base. Anyone grab that? When did that one hit? That was a little bit ago. I missed this one. Our 3-minute one, I think, dipped into it. It was a little bit wider yesterday where we saw price drop in, price coming back down now, using up some of those orders. We can see price starts to break below this area. We may see a continued move to the next leg base group of candles. So NASDAQ, we can see it's in that zone right now. Extending that to the left, you'll notice that price has been here several times already. So price has actually been here once, twice, 3. Use this one 4, 5, 6 times now. So a lot of those orders potentially have been used up. We may see price go lower to our next leg base group of candles. That one's going to be, again, below this resistance. We can see that one's within our buy territory as well. 3-minute leg base at 13,420.75 with our stop at 13,385. And then this leg base up here. So I was looking in here initially for the leg base, but this picture, who can tell me why this leg base, finding one in here might be a little bit more elevated risk? Who knows what that picture is called, where we find 3 touches on the bottom side? Angela's got it. Great job, Angelo. 3 touches on the bottom. We can see price has been on the top side 3 times. That's resistance. We see 3 on the top, 3 on the bottom. Oftentimes it's more of that dead space, and price can go right through those areas. Plus this one, if we did look here, was formed on lower volume as well. So just not enough odds enhancers for me to want to look there. Went up a little bit further to this 3-minute leg base. This one even may be more of a pivot point. So I would take a little bit more caution with this one as well. That one's at 13,723.25. So we'll see if we get that breakout. We could start looking for the leg base on the NASDAQ to take that breakout to the downside. But again, just being a little bit more cautious today since we're still 15 minutes from the market open, and we could see, some choppy price action today. Okay, so now going over to Russell, also an outside day. We broke the prior session's low in the context of an overall uptrend. Going down to the 15-minute time frame, we did tap it. Okay, so we're in our 3-minute leg base. anyone get into that one? I'm just going to mention this one I'm waiting on. So when it's pre-market, I'm a little bit more cautious with taking them just in case price may go lower. So we're seeing a bounce right now. I'd say just be a little bit cautious. We also have this one just a little bit lower below that resistance on the 1 minute time frame. Couple no's, yeah, I'm waiting on that one. Callie holding on. Okay, me too. So we're on the same page. We'll see how it pans out though. We can keep an eye on it and see, what sort of a reaction we get. But just with it still being in the pre-market and then seeing the news is more on the bearish side, that could cause a lot of that volatility. So we'll see what happens. There is now a big pocket of points to the upside we can see as well with this light volume drop. So if and when price starts moving higher, there's not going to be a whole lot in the way back to the upside. So we're in that 3 minute buy territory right now. And then also just showing you guys this one a little bit lower that was formed on high volume during the regular trading hours, 1 minute time frame. Lower one's going to be at 1988.7 with our stop at 1985. And then this 2 minute sell territory up here. This one we can see again at the origin of this move to the downside. However, it was a very low volume drop from the overnight session. So this one, again, I'm just a little more cautious with taking this one. And it also may be counter trend if we continue the trend to the upside. And then lastly, going over to the Dow. So Dow is the only one who has not broken the prior session's low. So Dow is currently an inside day. So keep that in mind for trading purposes. Dow is inside day. So we'd expect a little bit choppier market conditions with the Dow because it is an inside day. But again, step back, higher time frame. We're seeing we're making higher highs and higher lows. So potentially this could be a pullback, corrective move into our buy territories. Dropping down to the 15-minute time frame. So similarly, we have a 2 minute leg base at the origin of this move to the downside. I would use this one more of a target. Again, if price is coming back up, this one was formed on much lower volume in the overnight session. So just being a little bit cautious with that. Also notice our support area on the Dow. So we may see a breakout to the downside here, where you can see price use support once, twice, 3, 4 times. Price coming back down now. We may be anticipating there to be some people trying to go long here within this area, pick the bottoms here, but we look left and we see that price has tested this area several times before. I'm keeping an eye on this area. If we do come back down, we get a bounce, potentially form that leg base group of candles, and then taking the breakout to the downside. I would just say being a little bit more cautious because when we look left, our profit potential is going to be smaller. So not really a huge pocket of points, as we do have a 3 minute leg base just below it. That's at 33,686. That was also formed on higher volume during the regular trading hours. So we'll see what happens, but just mapping out the right-hand side of the chart, anticipating where price may go, and then also seeing, okay, this one may be a little riskier because profit potential may not be there, as there could be some unfilled orders at this point. Alrighty, so let's take a look at the indexes, all pretty correlated. So we are in some of our buy territories on the Russell and the NASDAQ right now. We're holding it for the moment, but notice how all the equity index futures are moving to the downside. So they're all correlated right now. We're seeing a lot of bearishness coming into play. That's where we need to see that if we are going to look for long trade setups, we want to start seeing all the equity indexes correlated and moving to the upside. Right now, just being a little bit cautious on those long trade setups because of the correlations of the equity indexes to the downside. Going over to bonds, so equity index is moving lower. We would be anticipating bonds to be moving higher. Not quite the case here. So bonds moving lower along with equity index futures. Typically, we like to look for that inverse correlation between the equity indexes and bonds. So something may not be quite right now, which is again another reason why I'm kind of holding back and just seeing what happens once the market opens. Internals, we'll keep an eye on these once the market opens, looking for those extreme levels. If the markets are dropping and the trend starts ticking higher, that may indicate some buying coming into play as the markets are moving lower. So with this drop in the equity index futures, looking for trend to push higher, typically above 1.5 or 2, may indicate a slowing momentum of the markets moving down. We may see that transition to the upside. We'll keep an eye on trend as well as our other indicators. And then lastly, pre-market indicator, we have been gapping up in the pre-market, but today we did gap down in the pre-market. More down ticks and down volume may indicate some more bearish sentiment, which we're also seeing in the news. But just remember, higher time frame trends still to the upside. So just be very cautious today. Let's see what happens once the market opens, where price is going. And then if we are looking for our long trade setups, tying in as many odds enhancers as possible, looking at the stocks, what time of day it is, and also keeping in mind that we do have a lot of economic reports coming out today. Fed chairman also speaking once the market opens at 9:30 a.m. Eastern time. So keep that in mind too, as well as all these other reports coming out. Alrighty, so a lot going on today. I'd say just be cautious today. I'm going to pass it back over to Jeff now. We'll take a look at what he's got going on for today. Should be an interesting day, but you guys have been doing great so far. It should be another exciting day. Thank you guys. Jeff, it's all yours.
All right. Oh, excuse me. All right. Good morning, everybody. Sorry I missed out on yesterday. Brought home a little of that Mexican flu. I'm not sure what I had for breakfast. Actually, I went to a kind of a nice little place. It was just right down the road from where I was staying, and you have some great machaca. And maybe it was really too great. Anyways, how many got into the Russell? I think, Chris. This was a zone that Caitlin had mapped out on the pre-market prep screen. I want to point that out. Mine was just slightly a little lower, but the stop line is still in the same place. I did go down to a 3-4 minute chart to kind of find the leg base group of candles. And I'm now participating in that with the entry line entry. Looking back up to the top, all of these small time frame zones within the sell territory, I found the leg base group of candles on a 2 minute chart. Okay, so we're starting to get that little bounce. I'm not sure how long this will last with all the economic and news coming out and Fed minutes and things like that going on. We may even, may get a short-term bounce just to capture people coming in. Now, the reason I'm kind of saying that is when we jump out to our other time frame here, well, they're all 15-minute time frame, but we get a good look at all the other markets. The zone on the NASDAQ is still much lower. Russell did jump into that zone, and we're getting a small bounce off of that. My entry was $19.99.90. And we're just now catching that bounce. But the thing I want to point out here is that the zone for the Dow in, just on the other side of the dead space, but a support area, 33,820, 33,786. Okay, it hasn't hit that yet, nor has the NASDAQ. Okay, Russell and the S&P are still holding that little area, and I found a very small time frame zone right here, and we got into that in the pre-market. And I took the trade off as the market was getting closer to the open, like I think a $2 or $3 little loss, just because I wasn't unsure. I was unsure where the market was going, and I looked at the zones that were a little bit lower. anticipating that, there might be some profit taking coming in. Okay. A few other things that I want to point out is on the internals yesterday, we saw that the VIX was very, very low. Okay. Extreme complacency. We saw the advancing issues over declining issues, mostly right in that no trade zone most of the day. We saw that the trend was very low and closed below 60 or at 60. Okay. This often anticipates, especially if the markets were going up and the trend closed below 60, that we would see a gap down this morning. Okay, and in saying that, we are seeing a gap down on the S&P, gap down on the Dow, gap down on the Russell, gap down on the NQ. Okay, so these are little clues. Also, the S&P went up and hit the 200 simple moving average, and that's significant. Okay, a pullback just before, so kind of use that as resistance. So kind of like using the S&P as a breakout trade in as much as we're looking at that 200 simple moving average as that resistance area. And then of course, where we're looking for the 50 simple moving average as we keep a close eye on that as well. Okay. Prices in between the 50 and the 200 simple moving average, that can cause a little bit of more volatility. Once it gets back above the 200 and closes above 200, then we know that some of the big mutual funds like Fidelity, Templeton, what do we got? Fidelity, Vanguard, those type of markets or those type of funds will start to come back into the market. As we saw the equity indexes, okay, come down 20% off the high. Okay, when that happened, that's when most of the mutual funds went to 80% cash, especially Fidelity's bylaws. Okay, now they don't come back into the market until it gets back up above a certain percentage off the low. Okay, and using all of that information that I just described to you, okay, we had 5 up days in a row, 6 up day. I mean, there were just so many little pieces of information that I collect to understand that we were looking for a potential down day today. Now, I do want to point out, okay, that if today closes positive, okay, that we will look for 2 more up days before we start to see a pullback. See, we had 1, 2, 3, 4, 5 up days, and then we see a pullback. And very often, if you go back and count the candles, they come in groups of 1s, 2s, 3s, 5s, 8, and extremely rare for 13. Okay, so these are all things that I pay close attention to and have been monitoring over time. Okay, many years of watching this and putting the information together, just so that, and I'm explaining that to you because these are things like a gap fill when we're inside or outside the prior day's trading range, so on and so forth. All of these are little things that we can measure and document to know what normally happens during certain times of the market where we see all these little pieces of information line up. Okay. Let's see. So in Q, the zone 13,431, 13,384. Okay, looking at that as we approach the open in about 1 minute. Currently, many of the stocks like on Apple, Tesla, Microsoft, Google, Meta, and Amazon, all of them gapping down just a little bit. Okay, may signal some more bearishness as it drops down into that little zone. Okay, Dow also has a little bit of ways to go down to get to that zone, making that Russell trade just a little bit of, might have to take a little heat on that as the market opens, and we'll see how that plays out. Okay, now the heat that we have to take is just simply by watching the NQ and the Dow come down to their respective zones. Okay, so I do have $45 worth of risk on the Russell. Okay, as we are waiting for the price to approach that. Crude oil is at the top of the open range breakout area. 87.11 would be going long, up to 89 would be that target. Break below 86.32, we'd be looking for a small zone right down there, 85.47, 85.11. And having another zone just below that, 84.62, 84.14. Okay. So now we're looking at the 5-minute candle we have, or 5-minute chart on crude oil. We're looking to take a trade as far as an open range breakout, a strategy. Okay. We're also using supply and demand. We're looking at the bigger picture. We're right in the middle of that dead space. There's a couple of areas of resistance and support. Anticipating price to come back down into that range about 85, 84, 83, which does match up with that lower zone. Okay, so big picture, downtrend on crude oil. Looking for a move back to the upside, maybe to find a supply. Okay, or dropping down into a demand to look to go long. So both sides of this are in play, but the dominant direction of the trend is what we want to participate. Okay, looks like I got stopped on the Russell. Russell dropping into that dead space now. Okay, so let's take this out of the way. And we're right there at that resistance area. Okay, but we're right on top of that dead space. Okay, so for me, Russell is kind of off the table until we get through that one, or waiting for that supply in the sell territory. All right, great little trade. That number 3 entry at S&P held pretty good. Anybody stay in that? I know I got out, but you know, it was a great little zone right there. Let's take a quick look at that area. Okay. I do want to point out, if you are struggling to find zones, is to start with support and resistance areas where you have 3 touches, adjusting the time frame up or down to make sure you have your 3 touches. Okay, where supply came in. Okay, and then identifying that buy territory, and then looking for the leg base group of candles within that buy territory in order to see if there are still some unfilled orders in that area. Okay, I just wanted to point that out. I mean, as we start putting more and more pieces together, you start seeing, well, support and resistance is really a locator. Okay, and then we find the sell territory or buy territory, and there'll be some more information on when do we take the sell territories and buy territories off, and when does that become active. Okay, so there's some more information about that. We'll have some more classes coming up in the future to kind of explain that detail, so you can incorporate that information into your trade plan. Now that we've seen price hit that upper range several times, I'm dropping down to a small time frame here, 3-minute. Yeah, let's come down to 2-minute chart, and we can see that there has been some sellers coming in this range. Okay, let's just document that. Nice and easy. We're not rushing into any of this. Okay, fill color be red, and we're looking for that entry about 47, 42.77 3/4. But before we take that breakout, we do need to find a leg base group of candles. Let's try to 1-minute. Yeah, right now, the risk is elevated. It is outside what I'm willing to risk on a trade. Okay. Now, your risk may be different, and I'm totally okay with that. For my risk and trading live in front of the students, That's outside my risk, okay? Now, if we're able to make another leg in base, leg out base, then I will be using a smaller risk and then looking to participate in that breakout, okay? And it looks like the price is breaking away from that area. And we got, let's try that one right up there. We got 3 touches. Again, this is really small time frame. And I just want to acknowledge the small time frames mean that there's additional volatility. And for me, I always find that I stay in a little too long with some of these. Okay. All right. So getting a nice bounce up on the S&P. And bad Russell stopped me out. Dow. No real bounce off of that dead space area. And NQ is slowly moving. Okay. Some of the stocks are just kind of bouncing, nothing really significant. And oil right in the middle of that open range breakout trade. Okay. So with crude oil dancing around inside that dead space, we have the open range breakout. So another piece of information that kind of stands out to me right now is, when do we trade the open range breakout? Okay. Do we trade the open range breakout when we're in the dead space? Or do we wait for a demand or supply to come into play? Okay. What if that 5-minute candle is too big? Okay, what size is too big? Too much risk. Especially if I go long 87.11, 86.32. Okay, I'm risking about 80 cents on that trade. Now, that's not too bad with 1 micro, but if you're trading the CL, the oil contract, okay, that's basically $10 $10 a tick. Okay, so you're risking about $80 a contract. Okay, so if that is outside of your risk parameters, then simply avoid taking that trade. Okay, and this is where it comes down to, what is your trading plan? What is your purpose for trading? Okay. Gold, we did have a little sell territory after it broke that support, 1788, 90 cents, 1791 and 30 cents. Okay. I think that was all the way down on a 15-minute, about 10. Yeah. Yeah, about a 6-minute chart. You can see the price just missed that a couple of times right up in that area. Okay. I didn't adjust all of these. It's time to clean up the charts a little bit. All right, VIX is kind of quiet this morning. Looks like I'm about break even on that one. Then we had one other trade that I'm in, ASML. I'm short, got an option on that. Which one was that on? Now, the VIX being this low, I bought options on this. When the VIX is low, it's time to go. When the trend is low, it's time to go. Okay, we anticipate that gap down. Looks like some buying came in here this morning at the open. But we're also seeing that we have about equal number of advancing issues over declining issues. We're right in that no trade zone. Okay. All right, so we got a nice little bounce. It's now looking like the markets want to continue to pull back a little bit. So in saying that, and also seeing that, we're now seeing that the NASDAQ breaking the Globex low, and we're looking for 13,431, 13,384 area. Okay. All right, Russell continuing to move down, now getting into that dead space. And crude oil also right there at the open range breakout. Okay. Now breakout trades tend to work better during or when prices inside that dead space. Okay. But the fact that we're in that, I mean, this reminds me of last week. Okay. Last week on the crude oil, we were also in a channel and a dead space before the crude oil report came out. Okay. Natural gas still making a move to the upside. Let's break this down. We made a higher low. We have that resistance area. And as we highlight that area, this becomes a buy territory. Now, taking the time to draw these out, okay, and recognizing a buy territory versus a sell territory will help you see that the distance in between will be your profit margin potential. Okay. Let's drop down to a 30-minute, and I'll put the little blue dots on there. And with a 30-minute time frame, we're looking in this range right now after the breakout, made in higher low. Look at 8.846, 8.676 as that demand area. Now you may be able to tighten that up, because what I'm also noticing is there is a smaller leg base. Now that would also make sense, wouldn't it? I know we don't cover this a lot in here because it's one of those things that traders tend to struggle with. I mean, it's pretty simple once you start doing your 100 picture perfect trade setups. But notice the leg candles inside that zone versus the leg candles leaving that zone. So that big zone right here, which you may say is too much risk, is still just a proximal line entry. And the fact that we found a smaller zone within that is right near the proximal line, maybe we can manage our risk a little bit better with 8.833 to 8.788. A lot less risk on that trade, if and when price comes back down to that area. Okay. All right, so the equity indexes. And Russell continues to break lower. NASDAQ also, while while the S&P is still holding this little range, 4269, 4264. Two minutes to the quarter hour. Okay. Just kind of waiting on, let's drop this down, kind of watch what we have going on with gold, see if it gets back up into our zone. Crude oil, You could take the breakdown at 86.32 or take the break to the upside at 87.11, still within that little channel. Russell continues to drop. Now, once it gets into that dead space, we may see a bounce, okay, but our targeted area is going to be on that support. Okay. Once we start getting into that dead space area. So let's take a look at the left side of the chart, kind of seeing that, okay. It's already taken out this buy territory. So once price violates it, simply get rid of the information that's no longer useful for you, okay. And now we have well, this is kind of a sell territory and a buy territory. Well, actually no longer sell territory, but it's a buy territory, but we're also in the dead space, okay. We'd have to go much lower to find where we have that couple of dead spaces, or sorry, not dead space, but we have a couple of other areas here. We have a pretty large buy territory and we have a smaller one inside of that, okay. So we're not overlooking any information. We're just aware that trying to go long inside this buy territory within a dead space, okay, is going to be elevated risk. That's all. Okay? It doesn't mean you cannot take the trade, and some of them do work, but many of them do fail. Okay. So if you're choosing to take, if you found a zone in this range, okay, and you're choosing to use that, then be a little bit more cautious, aware of the environment. Okay. So I would look for a bounce on the Russell 1974 half. Down on the outside support area, basically the same thing as we're looking for the Russell. Found a leg base, just on the outside or in support of that dead space. 33,820, 33,786. Now I want you to keep an eye on this. I know there's a lot of charts that we're looking at. Okay. Trend does play a part in this. Okay. But some of these zones may not hit until a little bit later on in the day. Okay. At the moment, as we look at all the charts together, we see the Russell is very weak along with the NASDAQ. Okay. And we see that the S&P and the Dow are the ones that are getting the best bounce at this point. Okay. None of them look really great for a long trade or a short trade at the moment. We're just kind of in that limbo area. Okay. Now, if we're in that limbo area, also like an inside day, so to speak, we need to be a little bit more cautious. Okay. Do not overtrade, kind of refrain from overtrading. Just gather the information on the price chart to see where we may have opportunities, and also the information of where price may go. Keeping an eye on the dead space as price travels through those areas. Breakout trades work best during that time, okay, and supply and demand trades tend to fail while in that dead space. Okay, but we do have kind of a mixed bucket of things going on in the marketplace, as the market tends to wait for the Fed minutes to come out. Just like an inside day here, we have IBM up, we have Goldman Sachs down. Even though we're outside the prior day's trading range, we did gap outside the prior day. So what does it mean when we gap outside the prior day's trading range? Well, often gaps fill the same trading day when we open inside the prior day's trading range. Okay. But when we gap outside the prior day's trading range, often the gap does not fill for a few more days. Okay. You know, like a gap and run. Challenge is the S&P has to come all the way back up to 4,300 area before we hit that first small time frame supply zone. Okay, within that buy territory, there's a couple of, and the ones that I have mapped out here, I had go to find the lake base, I had to go down to a 2-minute chart on each one of those to get the lake base group candles. Looking at the tick, we're still on the sell side of things on the S&P. Okay, so I'm not looking to try to go long at this point until price gets lower down on the S&P, 42.54, half, 42.49 even. Okay. Any questions? Okay. All right, so on crude oil, if we're going to take a breakout to the upside, it'll be after price breaks above that resistance, 87.72. If you're going to use the open range breakout at 87.11, okay, just realize where your stop is at. In order to take a breakout at 82.72, we would need a lake base group of candles for that, using 89.80 as that targeted range. Yeah, coming into a buy territory, okay? But that buy territory is also in a dead space. We had support and resistance in the area between that. So as we're watching that area, as we're about 8 minutes away from the top of the hour, okay? Russell dropping into this, we could expect a bounce, old resistance become new support, okay? It's kind of anticipate a bounce. But I would not try to go long now inside this buy territory because it is in that dead space. And that's not saying it won't bounce, okay? It's just I'm anticipating it not to work out, okay? So dropping down to a small time frame, looking back up and to the left, I don't see where we have a lot of 3 touches. Let me. If we captured that, there's 2. Again, so small time frames, you know, and I don't know if what you guys track that, but if you start identifying, you know, the size of your support or the size of your resistance areas, the size of the distance between the zones or sell territory and buy territory, identifying when you have a leg base group of candles, okay, how big is the zone? Okay, number of points. Because all of these are really great pieces of information. Okay. I had to go down to 2 minutes. Seems like all my little supply zones are right on a 2-minute on this Russell, 2004, 2007, that range up there. Okay, let's go back up to 15. And we can see the price paused right there. And if we go out to a 20 or 30-minute chart, let's try 30. Now, on a 30-minute chart, we're looking at kind of that wick over wick area. We go into a 60-minute chart, just a little bit bigger. Yeah, we're kind of in that wick over wick area. We'll look at a tick chart. Okay, so let's go 15-minute back here. Nice bounce. 78% of the time, you'll get a bounce off of a support and resistance. Daniel, what are you looking for on a tick chart? Copy. And what tick chart are you looking at? What time tick frame? which should start off with 300 tick. And that would put a little zone right there. Inside the buy territory within a dead space, okay? It still looks like it wants or potentially could go a little bit lower. $19.86, 80 cents, 1984 and 60 cents. Okay, so how are we doing with our indexes? S&P, Dow. Okay, getting a bounce on the NQ. NQ was not in the zone. Apple showing a little strength. At Amazon, Google, Tesla. So kind of a mixed up market. Okay. Just got to check the position I'm in.
Hey, Jeff, can I share my screen real quick?
Absolutely.
Awesome. So one thing I'm looking at right now is I'm kind of cycling around and seeing what I can find, but on the NASDAQ on the 1 minute time frame, you'll notice how we had this big rally up and it's been using up this resistance area over to the left-hand side where we had this stack of sell orders. On the 1 minute time frame, I'm keeping an eye on this area. As we drop down, we tested it once, we tested it twice, tested it 3 times. So I'm keeping an eye on if we do start to make that transition back to the upside. I believe we have the leg base group of candles down here. It's going to be a pending zone right now. We have our leg candle, base, leg out and base. So pending leg base group of candles. But of course, I'm going to be looking for where we have that leg base closer to the breakout. So if we do continue to move higher, we pull back, form that new leg base group of candles, and may look to take the breakout to the upside. So that's going to be above all these highs. I'm going to use this high over here, which is going to be above 13,569.5. And again, I'm just going to be waiting because putting my stop down here at 13,488, that's too much risk, but that's why I'm ideally looking for, again, that last test of resistance up here, a pullback, hopefully squeeze out some of those shorts. We talked about that yesterday, where this could be a point where a lot of people are trying to take shorts, and then we know where their stops are going to be at. So one area I'm keeping an eye on if we do start to make that transition, but just waiting in the meanwhile to see if we can get that next pullback. Just wanted to bring that out, but I'm having to go to the smaller time frames to find some of these moves to splice into. All right, I'll pass it back over to you, Jeff. Just something I'm keeping an eye on. I'll let you guys know though, is if it does come back and form the new leg base.
Reversal time, Scott says. Okay, let's jump over. Let me jump back over my screen here. Yeah, we got a big spike up on the trend, and we see that there was some buying of it. Advancing issues over declining issues are still right in that no trade zone. Actually, no, it's way down here, so it's in the buy area. Okay, just didn't see that little candle down below. All right, so reversal area, 10 o'clock reversal coming into play. So we got S&P, NASDAQ, Dow, all of them were moving up into that 10 o'clock reversal. Might even have something going on here on 30-minute chart on the nat gas. Okay, down at the support area, 9.297. Okay. And we're looking for that leg base group of candles. Just trying to get that leg base, so I know where my stop will be. A lot of risk on that. More outside my trade plan. But even though a trade is outside your trade plan, okay, and you should always be documenting these things, okay? I know some of you guys come into the room and you're expecting us to put out trade after trade after trade, okay? Well, the main purpose of the live trading room is to support what we teach, okay? Support the leg base group of candles, also support, trend and all the things that we see, buy territories and sell territories. And this gives you some real-time market conditions where we can prove what we say works, okay? I know some folks come in and they think, oh, well, just trade after trade after trade. Sometimes it works out that way and sometimes it doesn't, okay? Our main purpose for the live trading room is just to demonstrate the techniques and the tools that we talk about in the Mastering the Charts to help you formulate your trading plan, okay? I did drop down to a 1-minute chart on crude oil, and I found another breakout area, just slightly lower, at 87.27, okay? We still have that other resistance just up above it, so maybe short-lived, maybe a quarter, 25, 30 cent move. And now I'm waiting for the leg base group of candles to form in order to have a place for my protective stop loss. Here we go, Dan. All right, so crude oil still just chopping around in that no trade zone. I am anticipating it going lower as we broke that support and we have a drop in price basing, okay, going sideways here. I anticipate price to drop down into that support area. Now, you may be looking at the small 5-minute chart and say, oh, I want to go long, okay, but this whole basing area is part of another picture on a larger time frame. So the larger time frame says, hey, taking short trades is going to be more in your favor than taking a long trade at a breakout, okay? Now, even though I just painted a picture for a long breakout trade, I also went back and referenced a larger time frame to kind of see where we're at, okay? So if the breakout happens here on the small time frame, I anticipate it to break out, maybe base, and then start to come back down to finish its move down to that support, okay? You got 1 minute on CL. my chart's not quite showing it yet. But that doesn't mean you're wrong, okay? It just means that my data is not showing it to me. Okay, the leg base group of candles. And different platforms scrub their data differently, okay? S&P still holding that support area right near the Globex low. IBM starting to get back a little bit. Goldman Sachs is still flat. Now we're just cycling through information. There's not a lot of opportunity for us to go long or go short at this point. It's like we're waiting on something. Going short, we'll be waiting for price to get back up to that sell territory. Okay, right in the sell territory above resistance. Now the sell territory up here, okay, has three small time frame supply zones within that sell territory. Okay, as price is moving back to the upside in context of the larger time frame trend. Okay. Now I don't have a place to get in to go long on these, and I feel like I'm missing out on something because I didn't just stick with my trade over here on the S&P. Okay, so I'm feeling the fear of missing out. Okay, well, not a fear, but just I'm just not feeling good that I got out of the trade. Okay, but now I can't get back into it until I have another proper setup. And that proper setup would be seeing price going up to the sell territories. Okay. Or going up to that sell territory and looking for the zones within that. All of these zones painted on here, you can find them on a 2-minute chart. Okay. So it looks like the equity indexes are quiet at the moment. Russell on a tick chart, we're still looking for 1986.80, 1984.60. Okay, we'll see if that zone holds within the dead space. Okay. If you're using time-based charts, you just saw that we got a nice little bounce off of what was old resistance, becoming new support. Okay. 78% of the time, the first time support or resistance is tested, you're going to get a bounce. 3 out of 4 times, price is going to bounce off a support or resistance area. And that's a good statistic to help prepare you that if you don't want to sit through that bounce, then you need to be willing to prepare to take a profit. RTY. $150. Oh, that was a nice little trade. Look at that right here. This is like one of them that Caitlin was pointing out earlier that it's a perfect trade setup. Okay. And we can find a leg base group of candles down below. Price broke out, came back down, found the buyers. Okay. Now, if there's still buyers down at that level, then price will be supported. We had that 3 touches here, got the breakout. So it's the same picture we're looking at, no matter what tick or time-based chart we're looking at. $19.98. Yeah, I just didn't find a break of that support. Okay, I see that zone that you have marked right there. Okay, and price just came up and tagged it. Now, it's already touched this area before. How do we know if that zone can be used twice or if it can only be used once? We take the measurement of the leg candle or candles inside the zone. And we take a measurement of the leg candles leaving the zone. Okay, so at this point, it's just a tick, a little tick above. Okay, so you could use, you got a proximal line entry once. The next one you could look for is a zone entry, where price may go down to that 88.6% retracement. Okay. But it may be another opportunity if the Russell drops back down into that 1989.40 cents to participate in that. Wow, a whole lot of nothing. It's still chopping sideways. Okay, so let's see gold just hanging out, still waiting for that zone there. 1788.90 cents, 1791.30 cents. Crude oil did break out of that small range and now is coming back up to the resistance on the 5-minute chart outside of that channel. We're about 19 minutes away from that crude oil report coming out as well. Yeah, it was a quick little trade right there. Anybody participate in that? My risk was too much on the trade, so I just avoided it. Now let's come back down. We do have a leg base group of candles. Let's find the leg base group of candles because it did break out. And now we're looking for the retracement back up. 4-minute. One, two, three, four, five, 6 base candles. All right, so I'll put that back up a little bit higher. Here we have good leg base group candles. We have a zone within a zone. $9.430, 9.498, and there's also a smaller zone inside of that. We'll look for the retracement back up into there as our next opportunity. Missed the breakout trade. Okay. And now we're looking at on the nat gas 9.430, 9.498. We still have about 68 ticks in there, and that could still a good size risk on one, even the mini contract. Russell continuing to push. We got that bounce off of the old resistance become new support. We recognize that 3 out of 4 times that bounce can happen. We also seen the price did the first test and then went deeper in the zone, found some more buyers at that point and shot back out of that. Okay. So when the leg candles leaving the entry line are bigger than the leg candles in the zone can be used twice. Okay. The zone can be used twice. Often the first test of that entry line and then price coming deeper into the zone to that 88.6. That doesn't always mean you're going to have a successful trade. It just means that we could see some unfilled orders in that area. Now, if you still deemed that this was in the right trend and go in the right direction, you could hit that trade going long at 1990 and 60 cents to get a confirmation entry. Okay, then you'd have your target one, which has already been used. You'd be looking at that target one about 2004. Okay. All right, price breaking down on there. And once it breaks that little support, that structure, we got a bounce, about a 1-to-1 bounce, but it didn't follow through. So there's not as many unfilled orders. Looking for 1986 and 80 cents, 1984, 65 cents. Okay. But as we have mentioned more than once, that taking trades long or short inside that dead space within a zone, there's going to be elevated risk. But the breakout trades tend to play out much better. Okay. All right, crude oil, 87.72, looking for that next breakout, looking for that 89. Okay. But we do have an economic report coming out here pretty soon. Okay. And how many of you been tracking how much the crude oil moves on that report? I know Chris has. Let's see. Yeah, Chris says the average over the last 6 weeks, CL report is 73 cents. Okay, thank you, Chris. Now, for those that are not taking advantage of that information and tracking it yourself, okay, you wouldn't be prepared for this, okay? I know Chris has been documenting this and doing quite well with that, the documentation, which is really good, because now that's her information and she owns it. There we go. So 73 cents move up or 73 cents move down. That's the average of the last 6 weeks based on what Chris is telling us, okay? So once we get a little closer, we're going to look for a price breaking above, looking for that 73 cents, see if there's a zone above or a zone below that we could use to see the reaction of that report. We're still about 13 minutes away from that report coming out. All right, S&P went back down and tested that support area. IBM, Goldman Sachs still, it looks like they're both in a down move now. NASDAQ getting a pullback, still looking for 13,431, 13,384. Okay, so nothing's really changed here. I haven't gotten into a trade, long or short, just yet. Okay. Still looking for the Dow. Got 2 zones, got a 6-minute zone in that buy territory, and there's 2 buy territories here. Now I want to map out, there's nothing wrong with having 2 buy territories in the same area. As long as you're looking in that area to find your leg base group of candles. Okay. You have a 6-minute zone within the buy territory and a 5-minute zone within the buy territory on this 15-minute chart. Okay. We have a zone at 33,820, 33,786 on the Dow, just as a support. Now, if we're taking a trade bouncing off support, okay, if the trend is up on the higher time frame, then we might stay a little longer. Okay, but if the trend was down on the larger time frame, then we would just look for this 1-to-1 or 2-to-1 bounce. All right, getting that breakout. right, just cycling through information. All right, so the Aussie dollar. If these markets are going to change direction, we'll see in the FX market. Let's see, whole range. Maybe I take the crude oil breakout. Nice job, Terry. I was a little outside my risk parameters right now, so I'm waiting to see how we're going to react to that, the crude oil report coming out. Everything just holding and holding. Sort of like base right now. Yeah. This is the Australian dollar. $60-minute chart, British pound. $60-minute chart looks like these want to break down just a little bit more. You got a zone on crude oil, Caitlin?
No, I was actually looking for the breakout to the downside versus the upside, so wasn't on with that one actually.
It looks like there was a little drop-based drop right there. Okay, we're about 6 minutes away from the crude oil report. Now, for those that, and I mentioned, taking a measurement of that. Okay, so I'm using a 5-minute chart. And what Chris has supplied us with is the average over the last 6 weeks of what the crude oil reaction has been. And that's where we got to 73 cents. Okay. Now, I encourage you all to document this information. It's really important for you to kind of see what that average move up or down is. Okay. And as that report is coming out, we just kind of take an area and kind of measure out what is 73 cents move up or 73 cents move down. Does it align with a supply zone or a demand zone? Okay. At first glance right here, after the open range breakout trade at 87.11 going long, okay, we're just a few minutes away from looking for and still need to make adjustments, but it looks like that $89 range would be that first supply zone. Okay. where we have a leg base group of candles. Okay, that first supply zone after this little breakout. So the reaction of that report right now is leaning towards that supply zone being the reaction. Okay, now how do you measure this? Well, once the report comes out, you're going to be looking for and using that 5-minute candle. Okay, that 5-minute candle, you're going to be measuring that range. Now, the report's not out. You still got about 4 minutes. Okay. But it appears right now that if price reacts to the upside, 89 to 89.80, that's going to be the place we look for to sell short in the context of a higher time frame downtrend. Okay. Now we have the drop, we have the base and potential rally. And now we do have 89.72 as that supply zone within the dead space. Okay. And we can also see that within that dead space, okay, that this support area, and because price broke that support, makes this a sell territory. Okay. So looking for a supply zone or a leg base group of candles within that sell territory, we have one here, the 120-minute chart, 89.72, 90.70, drop it down to a smaller time frame. Looks like it might be just on the other side of that. Well, smaller time frame give us a little more detail, and we're in the same general area. Okay. So about 3 minutes away. So if I were to look for a trade opportunity on this using the average move based off of the economic report, which is right now about 73 cents, we'd be looking at $89 there as a potential to take a trade short in the context of a downtrend. Okay. Now price is still going to move to the upside, and we can also look for the demand zone. Okay, but keeping in mind that that demand zone is within the dead space. Let's just go down to 4 minute. 3. Okay, and we can see that we have a leg base group of candles. $86.72. Okay. About 1 minute away. Okay, so we're kind of watching how price may react off of that. So the measurement you're going to encompass is when that 5-minute candle, whatever that 5-minute candle's range is. Okay. And that's what we're going to document. Now, reaction, price could come back down. Let's see, 2 minute. 1 minute. And we do have that 1 minute, 87.31. Getting a little jiggy right here. All right, so the reaction is to the upside. Closest sell territory, or sorry, sell zone is at 89 to 89.80. Coming back out to that 5-minute chart. Now the candle that's forming right now is the candle that we would measure. The average is about 73 cents.
order filled.
Okay, there's some sellers who are stepping in. We're looking to see if we'll capture anything off of that. Looking at that 1-to-1 move coming out of there. At 88.24. Anybody participate in that? I'm gonna come back in here. I'm not gonna take a loss on this. I'm gonna place my buy stop market. We got one contract. I'm risking $1 now. I'm looking for 88.24, which will be that 1-to-1 move out of that. Okay. Now, once this 5-minute candle is complete, then there are 3 minutes for it to complete. Then we are looking for that measurement. And then we'll keep tracking that measurement over time. Thanks, Beastmaster. All right, let's just take a look at the equity indexes as we start to wrap up our session. And we still have the NASDAQ pushing a little bit lower, getting a little help from Tesla, Google, Amazon, Meta, and Microsoft. We do need some help from Apple. And we may get some of that momentum once Apple starts breaking that 171.79 area. Okay. And net Dow, you're still waiting for that zone, Russell. Okay, we're starting to see how that dead space is working out. Okay. And we're still looking for that target 1974.56. Crude oil. And just waiting on gold. Nat gas looking for a move back up. So kind of highlighted all of those. We'll turn the mic back over to Caitlin and she can do a wrap up for us. And we'll see if we can get that 1-to-1 move on the crude oil report and reaction to that report. I'm going to place an order at 88.24 to buy. We just have a 1-to-1 move. All right.
All righty, let's wrap it up, guys. Interesting market conditions today. So I was cycling through charts looking for either breakouts to the upside, breakouts to the downside, but a lot of consolidation today has made it a little trickier. So not much has changed as far as our prep screen and recap screen and our buy and sell territories. I think we just need to update the Russell, which started to push lower through some of those buy territories. But a lot of the ones that we did have are already are still there and haven't been tested yet. The 2-minute sell territory, again, at the origin of this move to the upside, same as the prep screen, as well as our 4-minute buy territory down at 42.35 on the S&P. We can see it's within that buy territory. That one still hasn't been tested yet. So that one's going to be same from the prep screen as well. Smaller time frames was down on the 2-minute and 1-minute, just seeing where we're at now on the S&P. Keep an eye on it as we have been testing this area of support several times. So potentially looking for that breakout to the downside if we continue to push lower on the S&P. We'll just need to look for the leg base group of candles to then take the breakout to the downside. So I do see it here right now. We'll use this as a pending sell territory until we see if a new one forms a little bit closer to the breakout, then we'll want to use that one instead. So right here, we can see green leg candle going up, base, 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 red leg out and base. now isolating that group of candles. We have a way to manage our risk if price does start to push lower, but ideally when you're mapping out the right-hand side of the chart, just looking for that last bounce into support, the pullback, which forms the leg base, and then price takes out all those buy orders at that point. Looks like we can even extend this a little bit further to the left to show that this area has really been tested several times down on the 1 minute time frame. So to splice into that breakout to the downside, you would take it below all those low points, which would be below 4265.75. So price coming down now, we'll keep an eye on that one. And then as far as our buy and sell territories, we saw those are going to be a little bit further away still. Going over to the NASDAQ now. We started pushing lower. We did take out this support area that we had in here and broke that, pushing lower, coming down to our 3 minute leg base group of candles, also within our buy territory. That one's going to be the same as the prep screen this morning. So price coming back down. If you are looking at NASDAQ to drop into that, keep an eye on what the stocks are doing, what time of day price is intersecting with that area, and all those different odds enhancers. This one was formed on higher volume during the regular trading hours though, so that's a good sign for that one. I'll just be a little bit cautious. So since we did take out this support area right in here, we may have a new leg base group of candles right at that breakout point before we started pushing lower. So let's see if we can find it. Just going down to the smaller time frames. We see we have a leg candle, base, leg, base candle. So 2 minute sell territory right at that breakout point. You can always make it a little bit smaller if you want, maybe going down to the 1 minute time frame, but just showing that that was present right at that breakout point as we're pushing lower. So just be cautious with your long trade setups. Always look for how much profit potential you have, and seeing that if you are looking to go long on the NASDAQ, we may not have as much profit potential back to the upside. So that is NASDAQ. Let's see. So coming down now, we have a sell territory here, buy territory here. So again, profit potential is going to be limited while we're within those zones.
NASDAQ's approaching the zone, 1340, 431, 13,384. S&P is right at the Globex low.
Perfect.
And
Yeah.
Russell going through the dead space.
Perfect. Yeah, so Russell. Yes, I wanted to leave both of these on just to show you guys. We had our 3 minute. I think both of these got a bounce, but we saw with this light volume drop coming down, we were getting bounces off these 3 minute, the 3 minute and the 1 minute. We also did get a bounce off that, but now price just continuing to move lower. So as it continues to push lower, we're going to need to find the next buy territory, which we can see much further away since a lot of these areas have been tested several times as well. Even right down here, we can see prices used up in this area several times. So we start pushing lower. The next one's going to be down here on the 10 minute, which is much further away at the origin of this move to the upside. That one's going to be at 1910 on the 10 minute time frame. And then stop is going to be at 1904.1. So looking for those breakout trades on the Russell to the downside at this point, and looking for the leg base to form and price to move lower. Going over to the Dow now, 15 minute time frame. So very choppy. Was expecting those breakouts to the downside, to the upside. We're really just consolidating within this area. They keep an eye on potentially that breakout to the downside where we've taken up a lot of these orders several times. You can see price has been here once, twice, 3, 4 times. Potential breakout to the downside, and then we still have our 3 minute leg base at 33,868. And then our sell territory is still fresh at 34,177. This one, just understanding that this one was formed on lower volume during the overnight session. So this one may be a little bit more elevated risk. So here is everything on the updated recap screen. Again, it's going to be the same as the prep screen. I've just gone ahead and updated the Russell as we're starting to push lower, but make sure you're marking these on your charts as well. As you know, we've seen, even just yesterday, a lot of those trades where we had the breakouts were happening after the session ended. So make sure you're keeping an eye on those if you do trade after the live trading room sessions.
How many got 1-to-1 on crude oil? Maybe some of you still in it.
Nice move. I think a couple of you guys got it. Manuel, did you get oil? Jason stayed in.
Stayed in, got an extra 20 cents so far.
Very nice.
But are you guys starting to see the value? I mean, we got to give this one to Chris. I mean, Chris is the one been collecting that information and provided that 73 cents for us. Now, could you all collect that same information? Okay. And you see why collecting that information is really important. Okay, is that now you have an expectation of what that average move is, and then you can incorporate that into your trading plan. Okay, and very, very powerful at that point to be using all of that information there. So great job. Thank you, Chris, for providing that for us and tracking it. But I strongly encourage everybody else to start tracking that information and being prepared for that. Okay. Sorry to interrupt you on that, Caitlin. We're seeing the bounce. NASDAQ just barely scraped that zone we had mentioned. We just got to be patient and let things work out as the Fed already has. These are the minutes being released. These are not a new announcement. Okay. All right.
Yeah, and thank you for mentioning, Jeff. Email is going to come out later today with the links for tomorrow and Friday's Discord group sessions. So stay on the lookout for those.
Yeah, I got to still create them. Get them over there. All right. Anything else you'd like to add, Kate?
All good. How'd you guys do today? I mean, interesting day, choppy market conditions for me, really just cycling and trying to figure out where the markets are going, but just being a little bit more patient today as price comes down to our buy and sell territories and seeing if we are going to continue with the trend and move higher. We shall see. Should be an interesting day tomorrow and Friday as well.
Yeah, we just on crude oil, old resistance became new support, so we got a nice little bounce off of that. Just a couple of ticks early, right around at 87.71. Nice job, Ohio 55. Nice job, Patrick. $50 a day is $1,000 a month to your trading account. Many of you are making more than $50 a day, but you're not keeping it. Okay. I know I've been through that camp as well. Okay. But $125 a day, it doesn't seem like a lot, but when you multiply that by 20 trading days, that's a significant percentage increase on a smaller size account. Okay. And if you're starting with a $5,000 account and you're making $125 a day, or even just $100 a day, that's about a 40% return on the capital in that account. That's amazing. Okay. And nothing to shake a stick at. That's a really good return on accounts. Okay. All right. I'm all done. Yeah, you will look for an email later on today. I just got to create the links for the Zoom meeting, and I'll be on with you guys tomorrow morning. We'll look to make a few more bucks. Okay. Everybody have a wonderful trading day.
Have a great day, everyone. Bye-bye.